All right, everybody ready? Great. Well, hello and thank you to everyone who's joining us today. And a big thank you especially to Judy and Stephanie and Mike and Jennifer. I really appreciate your willingness to share your stories and your perspective with all of us. You know, it really makes a difference to be able to tell your stories when I'm talking to my colleagues in the Senate, pushing the Biden administration to act, or anywhere else where your voices need to be heard. Our student loan system is broken, but we can fix it. When a mom from Tacoma or an 18-year-old from Spokane just entering a college gets a loan to afford higher education, they deserve a system that works for them. It should be easy to enroll in a sensible repayment plan. No one should end up with a monthly payment that they can't afford, and debt relief should not require making it through a gauntlet of paperwork. This is not too much to ask. So until we fix our student loan system, I have called on the Biden administration to continue its pause on student loan payments so that borrowers from Bellingham to Walla Walla can get some much needed relief. I am calling on the president to do so until at least 2023. And importantly, I am calling on this administration to use this pause to permanently fix our student loan system. There are four big things I think we can do to make that happen. First of all, I want to give borrowers a fresh start by placing borrowers who are in default before the pause back into good standing and ensuring they have their negative credit histories cleared without losing the ability to rehabilitate their loans. Secondly, I want to make something called income-driven repayments. That's the program that's meant to make sure that what you pay each month makes sense for your income level. It's the income-driven repayment program, more generous and easier to access by getting the administration to finalize a new repayment plan that would be available to all borrowers. And that plan should have a seamless enrollment process. It should prevent debt from ballooning over time. It should cap monthly payments at no more than 10% of discretionary income or what you make after accounting for basic needs, and sunsetting existing plans that are less generous and add confusion for our borrowers. That's key. No more asking borrowers to choose between multiple confusing plans or making monthly payments that adds stress for so many of our families. We need one workable income-driven repayment plan that ensures that everyone has affordable payments and a path to repay their loan. Third, I want to build on the tremendous relief made possible by the administration's Public Service Loan Forgiveness Program by extending the deadline for the temporary PSLF waiver to ensure that public servants like our teachers, our public health officials, people who our communities really depend on, get the debt forgiveness that they are owed. And the administration needs to finalize a new plan that is aligned with what I and other colleagues of mine in the Senate have already called for, where it is not a huge headache to make sure that your payments qualify towards debt forgiveness, and where we finally stop cutting our borrowers out of relief. Finally, I want the administration to provide immediate relief by forgiving some debt for all borrowers, while prioritizing those struggling the most, including borrowers of color, borrowers with low incomes, borrowers who've been trapped in repayment for over 20 years, and borrowers who left college with no degree or credential. When I talk to student loan borrowers in Washington State, one thing is painfully clear. The student loan system is broken. It is ruining lives and holding people back in Washington State. Borrowers are struggling with rising costs, struggling to get their feet back under them after this public health and economic crisis, and struggling with a broken student loan system. I have heard horror stories from Washington State borrowers about hours-long phone calls with student loan servicers trying to get their questions answered, or pouring through pages of fine print to figure out the best repayment program for them or how to consolidate their loans. And I've heard from people who spent weeks or even years applying for a student loan discharge after being lied to by a predatory institution or paying their loans for decades, all to find out they can't get the relief they were promised because of impossibly complicated paperwork or some obscure technicality. Those aren't just inconveniences. We're talking about a policy failure that has financial consequences that hold Washington State's entire economy back. The broken system is keeping people in jobs they don't like. It prevents them from buying a house or starting a family, and it forces people to choose between making their loan payments or paying for things like groceries or rent. So I am determined to push the Biden administration on the solutions I just laid out. But we also need to be clear-eyed that the cost of college is continuing to skyrocket. So to truly address the root of all of this problem and put our students back on a path to success, we have got to lower the cost of higher education and make sure it is actually helping students get quality, high-paying jobs. So no, I am working hard to try and fix our student loan system for everyone in Washington State. And I'm looking forward to hearing from all of our guests today about the impact of this so we can all truly understand why this needs to be done. So with that, I'm going to turn it over to Stephanie to talk about it. Stephanie, thank you for joining us.
Thank you, Senator Murray. I'm here today to join Senator Murray in calling for the repayment pause to be extended until our flawed student loan system can be fixed. Student loan borrowers are struggling, and their debt presents an increasingly difficult barrier to their success, mental health, and well-being. Just today, research from the California Policy Lab was released estimating that if payments resume in May, about 8 million people have a high risk of missing payments on their loans. It is a costly burden to bear in pursuit of higher education, and as much research has pointed out, it is also a highly inequitable and punishing system to communities of color. The impact that student debt is having on borrowers of color is harmful and is only widening the already significant racial wealth divide. The status quo of having students borrow tens of thousands of dollars to attain a degree is creating a cumulative disadvantage for young student loan borrowers of color and sedimenting racial inequality into the next generation, according to research from Brandeis University. While student loans remain a necessity for many BIPOC families in the short term, we must continue to work to make college more affordable for these families. Over the last 3 years, I've served as the student loan advocate for the state of Washington, and I have heard from over 1,000 borrowers who are struggling with their student loan debt. Sarah is a borrower in Washington who attended a for-profit school that promised her that the loans would be easy to pay off and that 90% of students get a job in their field after graduation. After 12 years of making payments, filing for bankruptcy, she has seen her loan balance triple in size. Her current payments for her private student loans are $3,000 a month, and her federal loans are in default because she cannot afford to make payments on both and does not want her co-signers on her private loan to be harmed. After doing everything right and trying to improve her life and her career, Sarah is actually in a worse financial position due to student loans. She considers leaving Washington and potentially getting divorced from her loving spouse if it would make her loans more affordable. Mary is another Washington borrower who, despite working in the public sector for 30 years, was never told that her loans were ineligible for the Public Service Loan Forgiveness Program. She was nearing retirement last year, and concerned about how she would afford to continue to make loan payments on a fixed income. Thanks to the PSLF waiver, she was able to get her loans forgiven and retire in peace after devoting her career to the state of Washington. We need to help thousands of borrowers who are public servants just like Mary. Borrowers' trust in the system has been broken, and we have a great opportunity now to fix some of the issues that we know exist, forgive some debt for all borrowers, and work on rebuilding trust with families in Washington. While I've been able to assist many borrowers in the last 3 years, borrowers are still struggling and require further protections. So I agree, we must extend the payment pause until we can fix the system, give borrowers a fresh start when payments do resume, make IDR payment plans more generous and less onerous to access, extend the PSLF limited waiver period to assist more public servants, and forgive some debt for all borrowers, with those who are disproportionately affected receiving the most relief. And now I will pass it over to Judy so that we can hear from some of our borrowers.
Judy, you want to unmute yourself? Judy, we can't hear you. You need to unmute.
While Judy figures this out, we're going to go ahead and take it to Mike. Mike, if you're there, if you could go ahead and unmute, that would be amazing. Thanks so much. Mike, were you able to unmute?
There they are. Just need to unmute.
Okay, sorry about that. Just as
Excellent.
we were asked, Zoom quit on us, and so we had to like re-come in. So I'll just introduce myself and my wife. My name is Mike Coons, and this is my wife, Jennifer. I have been a teacher in the state of Washington in Shelton School District for about, well, this is my 21st year. And I'm mainly speaking to the idea of the loan forgiveness for people working in low-income areas. So the school that I work for is not the traditional school in Shelton. We are I don't know, we've kind of gone with a different name now, but we previously were an alternative school for about 18 years, and then we've just kind of dropped the alternative name. But we're still the same. And so our students are largely, we have a large immigrant population. We have a large population of students with their own children, coming, students being raised by grandparents or single family houses, or, a lot of drug impact and generational poverty. And so I had heard about the teacher loan forgiveness program about 10 years ago. I think it was in 2010. And so I applied for that thinking I had put in 10 years, I had put in the amount of time I was supposed to. And then I was rejected because I had taken out a loan before 1998, which I didn't quite understand. It was just the rule they gave us. And so it wasn't until recently that my wife had heard about the new federal program that was going around. I'm not even sure what to call it, because to be honest, my wife does most of the financial stuff in the house. So she's going to talk a lot about this as well. I'm just kind of talking about where I work and kind of the hope that we had. When we started out, our student loans were quite a large chunk of a beginning teacher salary. I have put in, 20 years now, so I have kind of worked my way, to a more livable loan. So, but, we were really excited when we thought we might be able to get out from under them about 10 years ago. We are now in the process of working with Stephanie to kind of help us, maybe do that now, but it's not 100% sure. And when we were talking to the guy at financial service program, he kind of made it sound like it could be good, but then it could backfire on us. And then we got a little nervous. So the system is kind of broken, as you say, because it's not very clear on how to navigate that system. And it can be kind of scary because you don't want to make the wrong decision and find yourself kind of maybe as the example that Stephanie gave, actually end up, worse off by trying to navigate the system. So that being said, I'm going to turn it over to my wife, who's got a few other things.
I just was going to kind of elucidate that, we started out, we got married in 2001 with a $40,000 student loan already. We were starting a family with that. Mike, then he went back and got his master's degree. So that added a lot to that debt. We ended up at a $60,000 student loan level. And we've been just paying that off steadily over the past 20 years. We've never deferred or defaulted or anything. So we really thought we had met the criteria for the teacher loan forgiveness. And now we're hoping to figure out how to do it now with the new waivers. But it's really complicated, and it has been long periods of time on hold, which Mike can't do because he's teaching in school. So as a teacher, I'm kind of trying to take that on to help make this happen. And it's very confusing, and it has meant a lot of hard decisions for us as a family. I had hoped to get a graduate degree, and we couldn't take on that kind of debt, especially starting a family too. And now we have an 18-year-old. So we're looking at, we're still at $37,000. It feels like the interest just keeps offsetting what we're paying in. So it just feels like we're something we'll be paying on forever unless this waiver process, if that can help us get out from under it.
Because, we intend to, I don't want to have my daughter because, ours may not sound like a whole lot because it seems like college has really increased and so the debt burden that we anticipate our daughter having to take on, we want to be able to help with that. And we want to, if the system could get fixed before she finds herself basically, making astronomical payments, then, obviously we want to advocate for that.
Thank you both so much, Mike and Jennifer. Judy's having some struggles with her computer, so with deepest regret, I think we'll have to go straight to reporter questions, but